Hi, everyone. Today we're going to talk about AMD's first quarter of 2026. The print landed last week, and there's one number in this report that reframes what AMD actually is now. Let's get to it. Here's the headline: Data center revenue grew 57% year over year. Not client, not gaming, not embedded, data center. AI infrastructure is now the primary driver of AMD's revenue and earnings growth. And that one sentence, straight from Lisa Su's prepared remarks, is the most important thing in this entire report. And here's why that growth rate matters. Data center brought in $5.8 billion this quarter, up from $3.7 billion a year ago. That's $2.1 billion of growth from one segment alone. AMD's total revenue grew by $2.8 billion. So 3 out of every $4 of AMD's revenue growth this year came from one place: data center. Every other segment combined contributed less than a quarter. The shape of the company is being pulled in one direction. So here is the quarter at a glance. Revenue $10.3 billion, up 38% year over year. Non-GAAP gross margin 55%, up about a point. Non-GAAP earnings per share $1.37, up 43%. Operating income on a non-GAAP basis $2.5 billion. And the one I want you to circle: record free cash flow of $2.6 billion, more than 3 times what they generated a year ago. The balance sheet ended the quarter with $12.3 billion in cash and short-term investments. This is a profitable, cash-generating company now. Before we go deeper, a quick orientation on the business. 3 segments, 3 very different cost structures. One of them is running away from the others. Here's how AMD splits the pie. At the bottom, data center, $5.8 billion. That's EPYC server processors plus Instinct AI GPUs plus the Pensando networking gear they bought a few years back. In the middle, client and gaming, Ryzen for PCs and Radeon for graphics, $3.6 billion. And at the top, embedded, the old Xilinx FPGA business, just under $1 billion. Each one has its own customers, its own cycle, and its own margin profile. The story this quarter is what's happening at the bottom of that stack. A bit of context on where AMD sits. 11 years ago, Lisa Su took over a company trading under $2 a share, on the brink. Today, AMD is one of the top 5 U.S. semiconductor companies by market cap. They're the only credible challenger to NVIDIA in AI accelerators, the only credible challenger to Intel in x86 server CPUs. And unlike Intel, they don't run their own fabs. TSMC builds every leading-edge chip. That last part matters because it lets AMD scale supply without funding $20 billion fab build-outs. It's a different bet than Intel's, and right now it's the bet that's working. Now let's look at the highlights. And there are real records in this quarter, including one that I don't think the consensus saw coming. Pick any line on this chart and the gap is enormous. Revenue up 38%, gross profit up 42%, operating income 43%, net income 45%. But look at the line at the bottom: free cash flow. A year ago, AMD generated about $700 million in free cash. This quarter, $2.6 billion. That's 3.5 times the cash on roughly a third more revenue. Operating leverage just kicked in. So let's land on it. $2.6 billion in free cash flow, 25% free cash flow margin, up from 10% a year ago. And critically, this is the first AMD quarter where the cash generation looks like a hyperscaler tier business rather than a chip design house. That's the financial signature of a company crossing into a new league. Before we break the segments apart, here's one chart that holds the whole quarter on a single page. So look at the blue ribbon coming in from the top left. That's data center. $5.8 billion, more than half of all revenue feeding into the trunk. The $10.3 billion total then splits. About $4.8 goes to cost of revenue. That's the actual chip cost. $5.4 billion of gross profit continues right. From gross profit, $2.4 billion goes to research and development, which is the largest single expense line in the company. Marketing and admin takes another $1.3. After amortization and corporate costs, you end with about $1.5 billion of GAAP operating income. Then tax, and you land on $1.4 billion of net income on the right. The shape of this chart, fat data center, inflow on the left, fat green endpoint on the right, that's what a profitable AI cycle looks like. Okay, let's break the revenue down segment by segment because the three engines are running at very different speeds. Here's the revenue mix today: 56% data center, 35% client and gaming, 9% embedded. A year ago, data center was about 50% of the pie. So in 1 year, the AI engine has expanded its share by 6 points. And that share gain is what's pulling the whole P&L higher. The mix shift is the company's strategic story right now. And these are the year-over-year growth rates that produced the mix shift you just saw. Data center growing at 57% is roughly twice the rate of the next segment. Client at 26 is genuinely strong on its own. That's Ryzen taking share from Intel in the PC market. But it's still less than half the data center pace. Gaming, 11%, helped by Radeon discrete GPUs. Embedded, 6%. That segment was actually shrinking a year ago, so positive growth is itself the news. And here's the part that matters for the financials. Data center operating income came in at $1.6 billion, up 72% year over year, at a 28% operating margin, 3 points higher than a year ago. To put that in perspective, client and gaming generated $575 million in operating income this quarter, embedded another $338 million. Together, about $900 million. So data center on its own is producing more operating profit than every other segment combined. That is the compounding effect. Fast revenue growth, landing on an expanding margin. And it's what shows up in the company-wide free cash flow number you saw earlier. A closer look at client and gaming, year over year, both pieces are up. Client is up 26, gaming up 11. Quarter over quarter, both step down, which is normal seasonality. The holiday quarter is always the high point. Worth noting, the operating margin in this segment dropped about a point year over year. The mix shifted toward more client revenue, which is lower margin than gaming on a per-dollar basis. So even though both businesses grew, the mix slightly compressed the segment's profitability. The embedded segment, which is the old Xilinx business AMD bought in 2022. Back to year-over-year growth at 6% after several quarters of inventory correction. The orange line is the part to notice. Operating margin around 39%. That's roughly 40 cents on the dollar dropping straight to operating income. Embedded is the smallest segment, but it's the highest margin part of AMD, and it's a portfolio of industrial, auto, aerospace, and comms customers. The slow, sticky kind of revenue that diversifies away from the AI cycle. Now let's flip to the cost side and follow what AMD did with all that revenue. So here's the full GAAP walk of the income statement. You start with $10.3 billion of revenue, knock off about $4.8 in cost of revenue, that leaves $5.4 billion of gross profit. Then R&D is by far the biggest expense line at $2.4 billion. Marketing, G&A, and amortization take another 1.5 together. That gets you to $1.5 billion of operating income. After other income, tax, and a small discontinued ops gain, you land on $1.4 billion of GAAP net income. The shape of this waterfall is unusually clean. No big charges, no one-offs. R&D is the line every chip company gets judged on, and AMD's posture here is aggressive. Spending is up 39% year over year, slightly faster than revenue growth, which means they are not coasting on the AI cycle, they are reinvesting into it. As a percentage of revenue, R&D held steady at 23%. That's the budget for the next generation Instinct GPU, which is the MI450 and the Helios rack scale platform, plus the 6th generation EPYC server CPU codenamed Venice, plus the ROCm software stack. The bet AMD is making is that they can keep funding this from operating cash, and so far, the math is working. Here's what AMD actually did with that record cash. Almost 90% of it stayed on the balance sheet. Cash and short-term investments climbed 17% quarter over quarter to $12.3 billion. Stock buybacks were only $221 million, way down from $749 million the same quarter last year. AMD doesn't pay a dividend, so this quarter the message is clear. They are preserving every dollar of optionality, presumably because the AI infrastructure roadmap is about to need a lot of working capital. Inventory's already ticked up. CapEx is climbing. The cash is dry powder. And capital expenditure tells you the same story. 212 million a year ago, 222 last quarter, 389 this quarter, an 84% jump year over year. That is engineering and validation infrastructure, internal compute clusters, lab equipment, AMD ramping up its own backend. But the absolute level is worth keeping in mind. AMD's quarterly CapEx is still a fraction of what Intel spends in a single quarter because TSMC owns the fabs. Asset light is still the model. So that's the print. The more interesting question is what's locked in for the next few quarters. For the second quarter, AMD is guiding to $11.2 billion of revenue at the midpoint, plus or minus $300 million. That works out to 46% year-over-year growth. 8 points faster than the 38% they just printed. So the year-over-year growth rate is accelerating, not decelerating. Non-GAAP gross margin guided to 56%, also up. Lisa Su explicitly told analysts they expect server growth to accelerate further as they scale supply to meet demand. That last word, supply not demand, tells you AMD is currently shipment constrained, not demand constrained. And this is the deal of the quarter. Meta announced plans to deploy up to 6 gigawatts of AMD Instinct GPUs across its data centers. To put 6 gigawatts in perspective, that is multiple times more compute than Meta currently has installed in any single generation of AI hardware. The first gigawatt will be powered by a custom version of AMD's i450 GPU, which is a part that has not even shipped yet. Meta will also be a lead customer for AMD's next-generation EPYC server, or CPUs. So one of the 4 hyperscalers just made AMD their primary AI infrastructure partner for an entire generation. That is the kind of announcement that anchors years of revenue, not quarters. Zoom out and look at where AMD now sits in the hyperscaler stack. On the EPYC side, every major cloud, Amazon, Microsoft, Google, Tencent, Oracle, expanded 5th-gen EPYC instances this quarter. That is essentially table stakes now. The active fight is on the right column, AMD Instinct GPU adoption. Microsoft and Meta and Oracle are deep with Instinct already. Amazon, Google, and Tencent are at partial, meaning trial deployments and growing commitments but not full fleet yet. Watch that column over the next 2 quarters because every flip from partial to full is a multi-billion-dollar revenue print. And here's the product cadence behind that pipeline. The MI350 series is shipping today, with the high-end MI355X variant taking multiple leadership categories at the latest MLPerf benchmark. The MI450 starts ramping this fall. That is Meta's custom 1 gigawatt deployment. Then MI455X with HBM4 memory from Samsung. Samsung is now a memory partner for AMD on the high bandwidth side, and running across all of that is Helios, AMD's rack-scale platform, which is how they package the GPU plus networking plus software into a single offering for hyperscalers. This is no longer one chip, it's an annual cadence. So here's a watch list for the next 2 quarters. Green, server CPU share gains versus Intel. That's continuing and there's no reason to think it stops. Yellow, MI450 ramp execution. This is the first custom silicon delivery against Meta's commitment, and any schedule slip would re-rate the stock the other way. Yellow on gross margin too. It dipped to 55% this quarter, guided to 56% next, but mix and ramp costs can move that number around. Green on the Q2 acceleration itself. If AMD delivers the 46% print in August, the multiple expansion case gets stronger. And one red, tariff and export control exposure to China, which is genuinely outside management's control and is still working through the financials. Okay, time for the verdict, and both sides actually have real arguments, or this isn't a one-sided print. On the bull side, data center is 56% of revenue and growing 57% year over year. The margin profile is improving, free cash flow is at record levels, the Q2 guide is accelerating, Meta committed to up to 6 gigawatts, and the product roadmap is locked in through MI455X. That is genuinely as good as a chip cycle setup gets. On the bear side, like gross margin actually slipped 2 points quarter over quarter. The buyback collapsed, which suggests management itself wants more cash on hand. The MI450 is custom silicon for a single customer, and it has not yet shipped. The stock is priced for perfect execution, and there is real China and export control risk. Already, a $440 million inventory hit in 2025, and the new MI325 China shipments come with a 25% inspection tariff. Both lists are real. The bull list is just longer this quarter. If you have to remember 4 numbers from this entire presentation, it's these. Data center grew 57%. DC operating income grew 72%. Free cash flow was up 253% and hit a record. And the second quarter guidance implies the year-over-year growth rate is still accelerating, not slowing down. That is a coherent set. Each one reinforces the others. So here's where I'll leave it. A year ago, AMD was a great PC chip company that also did some AI accelerators. After this quarter, that sentence is backwards. AMD is an AI infrastructure company that also makes PC chips. That's the inversion that made Q1 a re-rating event. The open question now is whether the MI450 ships on time, whether Meta takes delivery on the schedule both companies have signed up for, and whether the next 3 quarters hold the line on gross margin while supply ramps. The bull case needs all 3. The next print in August is the first checkpoint, so that's where AMD stands. If you'd like more breakdowns like this one, every major tech print as it lands, plus the cross-company comparisons in between, numbers first and narrative second. Go ahead and hit subscribe, and the next one will be waiting in your feed. See you next video.